Dedicated capacity in the global reinsurance industry rose by nearly 10% in 2021, continuing an annual growth trend in recent years. Here to discuss these trends, part of a new AM Best report, is Dan Hofmeister, Senior Financial Analyst AM Best. And Dan, both traditional and third-party capacity was up in 2021, but notably on the traditional side. What drove that increase?
Yeah, the roughly 11% increase in traditional capital was driven by a few things. The first, and what I believe is the most significant factor, was the investment markets being accretive to capital positions. Equity markets were up, interest rates and credit spreads remained pretty low, so this allowed companies to access a lot of cheap debt financing while also capitalizing on investment growth in their equity portfolios. Now, while these factors were generally consistent with the prior years, we also saw an improvement in the underlying underwriting performance as well, mostly driven by the hardening rates. 2021 was another heavy catastrophe loss year. However, we witnessed most companies supplement underwriting gains with investment gains rather than mitigating the underwriting losses as they had in the prior years.
Dan, growth in third-party capital has moderated in recent years. Why was that?
So third-party capital is being impacted by a number of factors. Insurance-linked securities have been plagued with catastrophic loss activity in recent years, leading to some level of loss fatigue with many of the investors. However, larger institutional investors still see it as a diversifying asset class and have maintained those allocations to optimize the risk. As we moved into 2022, we have even more factors being added to the discussion here. Traditional equity markets are declining, which pressures the allocation percentage caps for ILS. And at the same time, there's more opportunities for higher rates and more favorable terms and conditions in many of these instruments, the Florida market being a prime example here. We've seen some ILS funds start to capitalize in these opportunities, and I wouldn't be surprised if more of them join in the near term.
Dan, has the growth in dedicated capital in the last 2 years resulted in improved risk-adjusted capital positions for the reinsurance market?
Interestingly, it is not. Although the growth in capital is significant, required capital is rising at a similar rate. So in 2021, our capital utilization, which is our measure of how much capital is needed to maintain the strongest risk-adjusted capitalization level, remained at an 82%. And this was due to an increase in both premium risk and investment risk. And I wouldn't say that's surprising, as we've seen throughout the market that the conditions are generally starting to harden and even up to this date continue to harden. So with 2022 being such a tough year for capital levels across the industry, it would be interesting to see how much the utilization will increase this year as a result of the projected drop in capital.
Dan, you mentioned that for 2022, AM Best is estimating an overall drop in capital. What's the rationale there?
Yeah, the start of 2022, John, has been very hard for just about everyone. With the interest rates on the rise and equity markets declining, we do anticipate a rather substantial mark-to-market loss in traditional reinsurance capital levels. However, the first half of the year has also been aided by a lot of strong underwriting results, and that's despite some heightened cat loss activity. Ultimately, we sell at an estimate of an 8.4% decline in traditional reinsurance capital. Now, this considers investment losses being somewhat offset by underwriting gains. So as we approach hurricane season here, if we do see a reversal in these underwriting trends, it could prove to be very problematic for the industry's capital levels.
Thanks, Dan.
Thank you.
That was Dan Hofmeister, Senior Financial Analyst, AM Best, and I'm John Weber for AM Best TV.